Hi, I just wanted to take a little bit of time to give you an update. Right now, we're at the end of September, and the Democrats in Congress have recently put forth a proposal that could affect a lot of people with the estate tax and related estate and gift tax issues. I wanted to go ahead and take the time to just kind of go over some of these. Now, before I get too much into the details, I do want to stress this is only a proposal. It has not passed yet. It is not law. I just want you guys to kind of have a heads up as to what potentially could come down the line if they're able to secure enough votes to pass all of these things that they're wanting to accomplish. So, again, it's not the law, but if it does become a law, we will have a short window of time to take action. Okay, so a few points of interest is one, right now, the estate tax credit, meaning how much a U.S. citizen can pass to their family or to anybody without paying estate tax, is $11.7 million. So current law, $11.7 million. That's really $10 million adjusted for inflation. This law is set to sunset or expire at the end of 2025. So January 1, 2026, that would go back down to $5 million adjusted for inflation. This is per person. So that's going to happen in 2026, whether or not this current proposal gets some life breathed into it or not. So that's something we still need to be aware of and keep in mind. But this proposal is wanting to accelerate that. So one of the things that they're doing is bringing, as of January 1, 2022, reducing the estate tax credit to $5 million adjusted for inflation, which would put us at about $6.2 million of estate tax credit. Now, that's still going to cover a lot of people, but for those that were on the edge of closer to the $10 million mark, anything over 6.2, we want to make sure we take a look at this very closely and maybe start putting some tax planning into effect before we lose some windows. Now, good news is the annual gift tax credit does not seem to be being affected. It is currently $15,000 per donor, per donee per year. So you can give $15,000 per person per year, free of the gift tax. And so that would pass outside of your estate. So that's one of the things that's going to be one of the favorable things that we can kind of look at. It's set to adjust in 2022 to $16,000. So that's some little bit of good news. So one of the recommendations, what should we take away from just this particular point? Well, what we need to realize is the party is going to end. So the $11.7 million credit is going to go away, whether it's at the end of this year or at the end of 2025. We need to start bringing you in and doing some evaluation to see, is this something that is going to affect you? Is the increase in your real estate values, your investments, the value of your business, if those things have increased, then what is it that your estate looks like right now? Are you going to be hit with an estate tax problem? So that's one of the things that we really need to address. The best way to do that is for us to sit down with your personal financial statements, maybe even with your CPA, to discuss kind of where you're at and see what kind of gifting options we have. Now, there is some good news in this proposal. There is a qualifying farm property credit, meaning you could get a valuation discount of up to $750,000. That the proposal would put it up to 11.7 million. So that's for farm property that's eligible, and there's certain restrictions. So that might help a few people, but it's something that obviously, if we have that available, we want to make sure that we have that covered. Now, the other thing that really is maybe even more important or more urgent to be looking at your estate plan for tax purposes is the estate taxation of Grantor Trust and the sale of assets to Grantor Trust. So those are some advanced techniques that we use to freeze the estate value, and we pass the estate on to your beneficiary. So it's a little bit of an advanced planning method. Typically, these would be one of the methods we would use for taxable estates. Now, at this point, they're proposing to limit the ability for us to use some of these things. So in a typical situation, we would transfer assets to a trust that is going to be treated as a grantor trust. Now, what that means is that the grantor, the person transferring the assets into the trust, will make a gift of that to the trust, but they will still remain responsible for the income tax. The income tax at the personal rate is much more favorable than the trust tax rate. So that being said, they're trying to eliminate that tool. So their proposal basically takes the grantor trust status out of the trust. And therefore, in the past, the income tax paid would not be considered a gift or an additional gift to the trust. But under the new rules, there would not be, you would not be able to pay the income tax or have the tax responsibility and still have the assets pass outside of your estate, because you would have already paid gift tax. In this case, you would not be able to do that. Furthermore, the transfer of the assets to the trust would be considered a taxable event. So there's a lot of hamstringing of options that are in this most recent proposal. So this is going to really affect grantor retained annuity trust, qualified personal residence trust, and even irrevocable life insurance trusts. So these are going to be some of the tools that are often used for taxable estates, and Congress, the Democratic Party, is really pushing to limit the ability to pass on wealth with the reduced estate tax risk. So that's one of the really big things that we need to be aware of. And if this were to take effect January 1, 2022, if we have not gotten a plan in place and funded and completed by the 31st of December, 2021, will be subject to the new rules. So that's going to be a really key reason why we need to accelerate taking action now. Okay, so another blow to the estate planning process for estate tax planning process is that the valuation for non-business assets is going to change. The proposal is requiring a different treatment. So right now, if you pass to your family limited partnership and you make those gifts of real estate that may be subject to a triple net lease, meaning you don't really have to do anything. The money just gets deposited and the tenant takes care of everything else. Or it has marketable securities that also don't involve any actual action. These are passive assets, and they're considered non-business assets. So current law, you could take certain discounts in valuing them as for lack of marketability, because what you're actually gifting is a limited partnership interest or an LLC membership interest that is not readily available to sell in the open market. So that discount, lack of control, lack of being able to having a minority interest discount, some of those discounts are going to be disallowed under this new proposal for anything that goes, any asset that is a passive asset. So being able to take discounts could reduce, conservatively 35% of the value of the assets being transferred. That's just not going to be available if this particular proposal passes the House and Congress and becomes law. So, being able to take those discounts is really going to be a major effect, because it'll eliminate the ability to take those discounts. So I know that some of the stuff that I'm talking about is more high level, more technical, and may not apply to everybody. But it's something that is, a proposal that is moving along the Congress. And if it does become law, we will have a very short window to react to. So if you have an estate tax issue, or you just want to find out what your estate valuation would be, give us a call. You can reach us at 956-791-5422. We'll be happy to visit with you. Let our staff know that you are setting up the appointment because of the video that you saw, and we will waive our $500 estate evaluation consultation fee. So go ahead and set your appointment now. It's extremely important to start getting ready for this. It's going to happen, whether it happens in 2022 or 2026. We still need to make sure that we're taking steps to restructure ourselves and put ourselves in a position to be able to benefit our heirs, and not have to have our Uncle Sam be our largest beneficiary. All right. Thank you very much. I hope you've enjoyed this video and gotten some value of it. If you'd like to see more content like this, go to our YouTube channel. And if you want to stay apprised as to what's going on our releases and videos, go ahead and click the like and subscribe buttons below. Click the little bell to make sure you get reminded for anything that new that we post. Thank you, and please reach out to us. Don't let this slip away. If this proposal does take effect, if they make this law, it is going to be extremely difficult to be able to pass wealth on without being subject to that estate tax. So a lot of the planning tools that we use in tax planning are going to be limited. Another thing is, reach out to your congressman if you don't like what this sounds like. it's still not law, so you can get a lot of stuff. A lot of stuff can change between now and the end of the year. All right. Thank you. Until next time, I'm at your service. Reach out to us at 956-791-5422. Thank you and have a good day. Bye-bye.